Yeah, good morning. What's up, guys? Let's get after it today. We are 2 minutes out from the close of Big Bar 17, baby. We are looking at a 5-minute chart here on NQ. That is, of course, Nasdaq futures. The market has been wick, back and forth since bar number 3. Bar 16, of course. I'm sitting here watching it. Bit wicky. So, okay, let's take a look at 17. Now, 17 is a monster. It's outsized. But is it 125 points outsized? No. And do we have stops below 1? Yeah, we do. Now, this is outsized compared to the previous bars. Not gonna bullshit you, but we have some options here. We have some options here to put on some risk. And you know I don't mind putting on some risk. So, let's see what we got on bar 17. Let's see if we close up nice and clean. If we do, 60 seconds, I want to hold on. I don't want this thing to grow really much more at all. Especially if we break through that wick low of 1, we got issues. But I don't mind the way it looks as it sits currently because we still got some space before we take out those stops. So you got about 20, 25 points. So let's see how it closes up, see if we can do something here. By the way, don't worry if you missed that move. There was nothing. That bar 16, that was a wiki bar. It's all right. Okay, we are 20 seconds out from the close of Big Bar 17, but in all actuality, the bar is really only 67 points in range. It's not like it's 150 points or anything. So I am going to get the copy trader engaged in case we can close up nice and clean, which it looks like is not going to happen. All right, let's wait for bar 18. Big old wiki close out of 17. There's nothing there. Nothing there on 17. I know a whole lot of you guys are looking at you're looking at 17. You're like, man, oh, I should have shorted 16. That mentality is keeping you losing. What was on 16? You say, oh, I broke the 20 EMA. Who gives a shit? It's a 20 EMA. Who cares? It's up there so that we don't get dizzy. And because you see one test, like, that keeps you out of 15, but really what keeps you out of 15 is what? Those of you guys in the tomb, you know, right? This or this wedge. That already keeps you out of 15. You say, okay, let's look for 16. 16, insecure close, shrinking bare body, inside the wick low of 5, sizable wick, right? That wick is too big on 16. It just is. We roll over, then the bears get the confidence. They didn't have it on bar 16. What are you gonna do? Fucking cry that you didn't get the setup? Come on, big dog. All right, 18. What do we got? Good morning, guys, by the way. How are we doing? Kind of just jumped right in. What's up? How we doing? Roy, good morning. Derek, how we doing, brother? Christian, good to see you. Trev, how we doing, big man? Yeah, option, you're damn right it is. Damn right it's awesome. All right. Well, we still got stops on 1, right around 25, 525. This is getting kind of close, Now, you guys know, after a big outsized bar, I'm okay with a shrinking bare body as long as it's clean and it's, a reasonable number of points for the ATR. ATR right now is 32. We can get the range on this bar, maybe like 25. That's reasonable. Meaning it's not like 6 points after a bar that was like 100 points, right? This bar here was like 67 points in range, maybe 70, 67 points in range. If this one can close, kind of thread the needle like right here, I can make a lot of sense of that because the risk really isn't that much. It's a little close to the stop hunts. I like the stop hunting to be the profit-taking punch as much as I can. But of course, not always going to line up perfectly where you have a big runway up to the stop hunt and then you pull it on the stop hunt. So we're 2 minutes out. Let's see how 18 can close up. If we punch through the stops on 1, then we got to reassess. But I would like to partake in that punch. Hold up there, Bears. Don't do it yet. Don't do it yet. Got to close beneath the wick low of 17 as well. We got to thread the needle here on bar 18, man. All right, 57 seconds. Bears punching through those stops. Son of a bitch. They're taking my money. Or I guess my potential money. All right, let's see how 18 closes up. 35 seconds out. How was our weekend, by the way? Did you do your job? Some of you were like, no, I was tweaking all weekend. Some of you were like, yeah, came in Sunday evening, blew about 15 accounts. Any of you guys come in last night make money? Any of you guys just hang out all weekend like you're supposed to? It's all right to trade Sunday nights, by the way, if you want. I think long term, it's kind of like, I'll make my money Monday. All right, there's the close of 18. Now that's going to break through the stops and suck right back, basically almost right to the wick low of 1. So now 19 is a reset bar. If we can get a nice clean bear body out of 19, I'll short it. I will short it, but it's got to be clean. Good, 19. Very good job. 4 minutes. See if they can hold that up. Good work, Christian. All right, good bar 19. Doing its job. Give us a nice clean close. I want to sit short on a nice clean bear close. All right, 245 out here from the close of Big Bar 19. Come on now, 19. Give us a nice clean close. Not too much wick there on the low. And you're saying, you're going to short the low a day. Damn right I'm going to short the low a day. We can get a clean close. If we don't get a clean close, then the answer is no. And by the way, you know, humans are at least beginner trader humans when they come into the market. I was the same way. I was the exact same way. Naturally, our natural instinct because a lot of us are pretty smart, right, is to be a contrarian. You're like, these bears are going to exhaust themselves. I'm going to buy. Well, the problem is you don't really have any kind of, and I always used to hate the word confirmation. Genuinely, I was like, that's so stupid. Confirmation. I knew even back then, I was like, this is a game of probabilities. There is no confirmation. There's just probability shift. And then I finally kind of started to understand what no one would explain was that confirmation is just the probability shift. But I think a lot of people who say it don't really realize that themselves. They think it's confirmation that the trade's gonna work, which of course it's not. It's just confirmation that it's a setup in your wheelhouse that you know you have edge on. So, buying the low, like when 19 pushes lower and you just hit buy because you're like, they're gonna exhaust themselves. Okay, when? When? Are you an investor? Because that might make sense. No, you're an intraday futures trader. Timing is everything. You're buying when the bears are in control and the bulls are extraordinarily insecure, right? And then you get run over more often than not. Even if you sometimes win and you time it and it bounces back in, it feels really good to time it, right? Oh, that dopamine hit, love it. You're gonna get run the fuck over. Because it's super easy when you're buying dips without probability shift confirmation, right? To just say, I just 20 more points. Just move my stop. All of a sudden your stop is off the chart and you're red 230 points and the accounts are gone. All right. We are 10 seconds out. Copy trader engaged. Got to get that stop limit sell ready. Ugly bears. No backbone. They strike again. We will watch bar 20. Come on, big bar 20. Good start. 19 had a good start too. Then got all insecure on us. There you go, 20. Good job. Now, of course, this is hindsight bias, but I'm going to use that shit. I'm going to use that to my advantage to prove my point. Be honest. How many of you bought 17? It dumped and you're like, no way this thing goes lower. Those bears are way too cocky. I'm just going to punch the buy button. This thing's heading back up. How many of you guys did that? Whoops. How many of us did that? I didn't do it, but how many of you guys did that? See, Tony has a pair on him. He'll say, I did that. Me, I'm the fuck up. Tony's the fuck up, and I won't do it again. Good work, Tony. We've all done it. I've done it more times than I care to admit. Yeah, now all the people who didn't are going to say, I didn't sell that, and then everyone who did it is going to hide. Come on! Not the stream for you, man. No ego. Yeah, there they are. Outlaw, I did. It's all right. Stop doing that. There was no probability shift there. There was nothing, according to RAM, that should have caused you to buy 17. Nothing at all. Not even sell 17. There was nothing on 17. All right, 225 out here on big bar 20. See how 20 tried? Came right back up. More extreme version of 19. All right, 20. Now you guys know if I'm gonna buy out of a hole like this, it damn well better be 2 nice, super clean consecutive bull bodies, ideally 3. Ideally 3 if I'm buying up out of a hole. Now there is an option here to get long on bar 20 if it closes above the wick high of 19, but the wick low of 20 is very, very sizable, and the risk there would end up being about 60, 65 points, depending on how this bar closed, if it closed above 19 to begin with. The wick high of 19, right? But if it doesn't, there's no option there anyway. "20 seconds out. Javaz, I ended up failing 6 evals on Friday. 2,000 in profit, got greedy. Javaz, did you size down into the finish line? Come on, brother. Size down. I mean, listen, sometimes you're going to get, deep in the money on an eval, and then the market context shifts. You don't realize it at first. Even though you size down, you just take a number of losers in a row. It'll happen every once in a while, but realistically, probability states that when you're that deep and that close to the pass zone, as you size down, yes, the sample size increases. You'll make the first 3 quarters of progress often faster than you'll make the last quarter, but that's okay. You size down into the finish line because as you're investing more time. Listen, guys, everything I just said, this is the point. In eval accounts, we are not optimizing, at least I don't believe you should be, for being cheap. How much money do you want to make, big dog? Some of you guys just need a mindset shift over anything. You come in here, you're like, I only want to buy 2 evals, and I'm going to keep those 2. I'm going to pass those 2, my first 2. I'm going to keep those fundeds forever. And you're like calculating your ROI if you keep them for 35 years, and you're like, that'll pay my bills, my expenses will be $100 total, and I'll make $8 million. Bro, if you make $8 million, do you really give a fuck based on your current situation whether you spent $100 or even $2 million to get that $8 million? Do you really care? 3 minutes out. Don't optimize for it being cheap. Optimize for opportunity cost in the evals. I get it. In the early days, believe me, I get it. You're like, there's only so much money to go around. Yeah, I know. What's the goal, homeboy? Is the goal to make $3,000 a month? You seen prices of damn near everything lately? You back your car into a post. Or somebody does. Your wife backs her car into a post. Your monthly income is fucking gone. Don't optimize for that. Fuck 3. Let's do 30. Let's do 300. Come on, man. You gotta be shooting so high that you value your time more than the cheap, how cheap these evals really are. I mean, come on. I get it. It's not so easy at first, but you gotta do it. It's very, very important that you make that shift. Don't put yourself in a bad situation in the meantime, but you know what I'm saying. Like, you gotta optimize for time, not saving $30 by wasting 8 weeks in an eval. Come on, dude. All right, bar 21. Join the tomb. We'll see you inside. All right, 21. Big old doji out of 21. All right, we'll see if the market turns into a big trading range. Started thinking this already on bar 19 because it's like a lot of times when you get these big pushes, you push through the stops. The bears run out of reasons to keep taking it lower, at least trying to, and oftentimes they'll say, okay, let's go risk off, and the bulls step in, and those cocky bulls, those early bulls, start buying on like 18, 19. Sometimes that turns into a trading range. We don't like when that happens. It's actually not a great thing because it kind of just wastes our time while we wait for it to go, pick a direction and go and give us a real setup. But if it's going to turn into a trading range, that's fine. Just don't be a single bar trading range. Like this is kind of already looking like 19, 20, 21. We can get 22 popping up, closing above the wick high at 21, and then 23 closing above the 20 EMA. That'd be great. If we can get 2 consecutive bear bodies closing beneath the wick low of 20 on the second bear body, clean, that'd be great. Anything but a single bar trading range. And if we do get a single bar trading range, can anyone tell me what the answer is? What do we do? According to RAM, what do we do with a single bar trading range? We wait. Brandon, we wait, we do nothing. When you're in a environment where the expected value, at least if you're trading RAM, which, if the expected value trading RAM is negative, then it's usually going to be negative for a lot of strategies. If the expected value is negative, what are your options? You either do something and predictably lose money over a big sample size, or you do nothing, which is the highest ROI activity when the when the expected value is negative. Trading's a weird thing, man. A lot of you guys, we come in with this entrepreneurial spirit. It's like, if I'm not moving, I'm going backwards. I get it. I know. Everything you're feeling, I've felt. None of it's new. Every mistake you've made, I've probably made 10 times, 100 times. But it's a weird thing. Trading is kind of, it's on its own. Because as an entrepreneur, that's true. If you're not moving, you're kind of going backwards. But in trading, it's a little different. It kind of goes against that spirit. It's like, if there's no positive expected value, the correct answer as far as making money is to do nothing. Because otherwise, if you do anything, you're predictably giving it back. And then as soon as the positive expected value returns, you hit it. When you should, without a second thought. Manage it how you should. Accept the outcome. Keep going. All right, minute 50 out here. Come on, bar 22. $40 seconds. Come on now. All right, nothing out of 22. Come on, bar 23, clean this up. There you go, 23. All right, halfway through bar 23. What's up, media? How we doing? All right, 15 seconds out here from the close of big bar 23. Gonna close inside the wick of bar 20. How you guys doing so far, by the way? You know, I know it looks sort of volatile. I mean, the range on the day is almost 200 points. As far as setups, man, I mean, you go back bar by bar, and there's really, I guess you could have taken bar 2, the close of bar 2. It wasn't. I mean, bar 1 was not that clean. And then, you know, 15 still in the trading range. Gotta let 16 open. 16 wiki. 17 outsized. Had potential. Then wiki. 18 punched the stops. Gotta wait for 19. 19 shrinking and wiki. With RAM, you should get to the point where you can do what I just did with zero effort. You go back bar by bar, you look at the day, and within basically 15 seconds, if not 30, you know exactly what setups you should have taken. And ideally, you took as many of them as possible. Today, I mean, we're only on bar 24. Do not lose hope. These days can sometimes turn into the best days of the year. But if you've been sitting on your hands, you're doing the right thing, at least if you're trading RAM. But I am ready to hit, so let's see what we can get. No, AK, I said it can, brother. Meaning you don't want to check out just because the price action's doing this. All right, minute 18 out. Let's see what 24 gives us. All right, we're 11 seconds out. I'll get the copy trader ready just in case we get a big last second dump off here below the wick low of 20. Of course we won't. So just want to be ready. On a day like today, you don't want to miss anything. So bar 25, let's see what we get. All right, I think it's about that time. Back in 2 minutes. Watch this baby move. What's up? Welcome back. All right, we were waiting for this little sideways trading range, otherwise wedge, little bear wedge, to snap up and give us something good. $30 seconds here to the close of Big Bar 26. Beautiful, beautiful, beautiful. I'm on 27. Looking forward to the close of 27 here. Let's get a clean close. Come on, you bears! The insecurity, it's embarrassing, big dog. Come on now, close that baby low. All right, well, while we wait for 27, what I want to do is I want to take a poll, but I don't want to take a real poll. I want to take a poll in the chat. I want to get an idea. How many of you guys, and if you care to share, like how many you've taken, feel free. You definitely do not have to. That's no one else's fucking business but yours. In the chat, have you taken a payout from any prop firm? And for some of you guys, the answer to that's going to be, yeah, I took one like 6 months ago and I've been struggling to get one ever since. Okay, that's a different conversation, but just have you? Brando, yep. Chris H, yes. Apex, good work. Peter, multiple, good job. Ryan, yes. Roland, yes. Lee, yes. Uni, yes. Alpha, yes. Keith, yes. Michael, yes. Mario, deride. James, Brandon, all yes. Manuel, 6 from Take Profit in the last 2 months. Good work. Yeah, I mean, listen, guys, I can only kind of tell you what I like doing. You want to follow it? Great. Works for me. Trade smaller per account. In a 50K account, trade 3, 4, or 5 micros. Okay? Be patient, be disciplined. Trade a price action strategy. If you want to trade RAM, works great for me. Trade RAM. Look up in 3 weeks and I think you'll be pleasantly surprised. A lot of people already have. It's not just me talking. Look at the fucking chat. And you don't even have to join the tomb, dude, if you don't want to. Like, a lot of people have learned from just watching the stream. Now, granted, the tomb is faster. It's better. It's expedited. But you don't have to. I'm not going to, like, hide the secrets behind a paywall. That's fucking stupid. The way that I believe in doing that is give it all away. And then if you want to pay to just get the information faster and cleaner and more direct, then you do so. Which I would do every time, by the way. You guys know my mentality at this point. You pay for speed. Pay for speed. All the information already exists on the internet. You don't pay for the information. You pay for the speed of the information and the direct of the information and the proximity to the information. That's what you should pay for. And again, I would pay for that every time. Fortunately, that didn't really exist too much when I was getting started, believe it or not. All right, bar 28. Telling you though, for a lot of you guys, the problem is I'm serious. The problem is your fucking ego. You trade too big. You think I want my money next week. I want my money today. I want my money in 2 days. Dude, what's wrong with getting your money in a month? What's wrong with getting your money in 2.5 weeks? Just chill the fuck out. You know, sizing down and trading a real strategy and having patience to the point where maybe you find consistency as early as like a few weeks from now, a month from now. That's going to look really good when in 3 years you're looking back, still not profitable or consistent in any way, shape, or form because you've been impatient. You're going to look back and say, wow. Wow. You're going to say, you know, 30 months ago, to just bare my teeth and get through a month of being disciplined, which probably would have given me results, is looking pretty good. I'd have been profitable for probably 29 months at this point. It's one decision away. Just make the fucking decision. Is your family worth it, or do you need to be entertained like a child? You want to come into your office and sit and get as many dopamine hits as possible while your family fucking suffers because life is too expensive. 3 minutes! Bar 28! 27, big old doji, man. Bull's taking it back. Nah, Mike, again, with evals and test accounts, like an Apex eval, for example, I'll start with 1, 2, or 3 minis, depending on how volatile it is. The more volatile, the less size I'll take. And then I try to make progress quickly. And I take lower quality setups too. I still take good setups, but, you know, you guys know, on a funded, my minimum. Again, just telling you what I do. Maybe this isn't right for you, but what I do is in a funded, B- or up is my minimum. In evals, I'll take a fucking C- setup. Because I don't care. I don't care about the cost of the evals. I care about my time. And even if your time isn't more valuable yet than the eval, if you never treat it like it is, it never will be. I don't care if you're sitting there broke as fuck on an $80 laptop you bought on Facebook Marketplace. Treat your time like it's more valuable than the eval. I'm not telling you to gamble the fucking eval. I'm telling you to take quality setups. But if you have reason to believe that you have positive expected value, why are you spending 7 weeks in an eval? That's called opportunity cost. Okay, so by the time you have some traction, again, in the early days, it's a little bit weird because it's like, well, if you only have $30 to your name, you should probably be doing something else other than trading until you have a little more padding. But when you have a little bit of wiggle room to really go at this, take your time, be patient, be disciplined, trade a reasonable methodology like RAM if you would like to, scale horizontally, and then you gotta respect your time. You can't be spending 6 months, 6 weeks. I don't even like to spend, days in an eval. I like to pass my Apex evals in a single afternoon. I'll trade them bigger, like 1 or 2 or 3 minis, until I get maybe halfway or 2/3 of the way, maybe 3/4 of the way, and then I size down into the finish line. Why do I do that? Because I'm now investing more time into that eval, so I want to retain a higher probability that that time pays off in the form of receiving a funded account. Does that make sense? If I'm gonna blow the fucking eval, I wanna know on trade 2. So I'm like, okay, I only invested 4 minutes. I'm not even thinking about the money. I'm thinking about the time. Make the shift, dude. You want to make a lot of money? You got to think like that. You can't think about your $30. I get it. It's not so easy when you're broke. I know. I've been there. You have to, though. It's necessary. 20 seconds. Now, again, don't make your kids go hungry. Like, that's not what I'm saying, big dog. I'm saying the mindset needs to change. All right, close of 28. Coming here. There's the rollover. Big ol' inside doji. Started reading about trading options. Also, what was the strategy that you used, still use, to first become profitable? The first thing ever that allowed me to pay for everything. Now, granted, my now wife and I, cost of living back then was not a lot of money. Okay. But we were fully on our own. Right? I mean, we still had to pay rent, cars, insurance, all of the food, all of it. And it was all paid for through trading. The first thing that ever let me do that was net sell. I don't mean short the market, okay? I mean net sell option strategies. Okay? Covered calls, sold puts, spreads, 2-leg spreads, 4-leg spreads. That's what got it started. Went full-time doing that. Now again, if you have really high expenses, you're going to need a lot of capital to make that happen. I didn't have that much capital. Volatility in the market was good. And I was making money and paying for everything for a good period of time from doing that. Which got me excited. I was like, okay, this is possible. Then I launched into the other stuff. Because the reality is with selling options, sometimes it's good, like it was then. But then, you go through periods where the market volatility dies and you're getting, way less juice out of the premium and it kind of dries up. So I think realistically, your main focus should be actively intraday trading like futures or something, whether you want to trade small cap momentum stocks or futures. I think having a main focus on futures, especially if you're young, is a good idea because futures are a deeper market and they let you scale bigger. So 40 years from now, there will still be enough liquidity for you to be trading. If you want to have the ceiling, right? Even if you don't use it. If you want, you can get really big in the futures market. Really, really big. Small cap momentum is a great way to find edge, but for beginners, it's also a great way to blow your account. A lot of beginners will blow their account. There's a pattern day trader rule, so you need to have probably at least 30,000 to have a $5,000 padding to be over the 25,000 PDT. Now that will change here soon. It has not yet. That PDT rule is going down to 2,000, but futures don't have a PDT rule at all. A lot of ways to make money trading, but if you're like Nico, I'm 24, I'm just starting to trade now, I kind of want to do it all someday. What should I focus on? I would say focus on futures. That's what I would say. It's probably going to be the thing that you're married to the longest and lets you scale the most, right? And again, you can make a lot of money doing other things. You can find a lot of edge doing other things, but in the futures market, you kind of get a really well-rounded balance of all of it. And you are not going to hit the ceiling most likely in the futures market. It's just so deep. Any size you want, it'll eat it up. 40 years from now, you're trading a shitload of contracts. It'll eat it up. Even if you have to leg in, leg out to kind of help with slippage a little, it's fine. It'll eat it up. The market's huge. The futures market is fucking massive. And the amount of money you can make here as a good futures trader is disgusting. It's ridiculous. These are products that were developed for trading and hedging. They're wonderfully designed. The futures market is a gift to traders. It really is. All right, 25 seconds out here from the close of Big Bar 29. What you got for us? All right, gonna close inside the wick of 28. All right, market, come on now. Come on, Bar 30. Give it to us. Man, look at this movement since bar 19. That's crazy, huh? There's nothing. Three and a half minutes out from the close of bar 30. What's your take on using a variation of ATR for a stop loss? Does it affect the win rate of RAM? Well, a lot of things affect the win rate. Guys, RAM doesn't just have a win rate because everyone trades it a little bit differently. That's, you know, people ask that all the time. They say, what's your win rate? The win rate is completely fucking irrelevant without the other side of the equation. Reward to risk. How do you manage your trades? Are you a scalper, a swing trader, or a scalp/swing kind of cocktail mixture, which is what I'd call myself depending on the setup? So, but realistically, you can use a variation of ATR, but then it kind of starts being less RAM. We do use a variation because, like, if it's an outsized bar, I'll oftentimes not take the trade if it's really outsized because the risk of the signal bar has to be too high compared to the ATR. Does that make, we go deep on this in the tomb all the time. But just straight up using, like, okay, I'm gonna risk half an ATR. I don't like to do that because I want to give the trade actual time based on something real that other people are looking at, which is why I like to use the signal body to manage risk. Or if I'm trading a range, I like to use some kind of wick high that I know is super obvious that people are looking at, that if it gets taken out, it gives my enemy side. Like if I'm sitting short, if it takes out that wick high, the bulls all of a sudden have confidence and the bears are feeling like shit. I like to use something that's, I know ATR is real, but I like to use something that's real in terms of the price action and visually real that turns into kind of a self-fulfilling prophecy that renders my trade too low of a probability to leave it on, if that makes sense. So I much prefer in continuation setups to just use the signal body. But ATR does come into play. That's exactly right, Trev. It's exactly right. Somebody, you know, one of the biggest problems I see on social media is like, people could come in and they wouldn't even know it. They could be talking. Now, let's just talk about some imaginary character. They could be talking to one of the best traders on the planet. And a beginner on YouTube comes into the chat and they say, "What's your win rate?" And he or she could say, "Oh, my win rate, it's 17%. And they'd say, "Haha, you fucking suck," and leave, not knowing that their win rate is 17%, but the reward to risk is 10-1. On the flip side, they could come in and say, "What's your win rate?" And they would say, "Oh, my win rate, 94%. And they'd say, "Oh, you're a fucking monster," not knowing that his reward to risk is 1, risking 100 to make 1. You understand? That's very, very different. Win rate means nothing without the other side. And the other side is elastic. It depends on the setup, right? It can't just be all robotic. There needs to be some kind of discretionary factor to the reward to risk depending on the setup. This is a math business. If you can't understand that basic math, this ain't for you, homeboy. All right, 350 out. And it's not a complicated math business, by the way. This is like a statistics in 4th grade kind of business. Maybe 6th grade. All right, so I like bar 31, but I really want to see it close pretty sizably above the wick high of 21. I really would like it to do so, not only because that would put the shrinking bull body argument a little more to rest compared to bar 30, but it also puts the trading range slash wedge with a flat top argument from the bears to rest a little bit more. If we could close above, you know, it's not a hard level, but like above 25,550 would be tremendous. That'd be great. Halfway through this 5-minute bar, 225 out to the close of 31. Beautiful. 2 minutes. Come on, 31. Do it to him. Beautiful. I like this. I like this. Time for me to take a walk over to the execution screen. We are there. And see what bar 31 can do for us here. Come on, 31. I don't want to see insecurity out of the bulls. None of that. 60 seconds. I want to see a nice, cocky, confident close out of you bulls, and I want the bears frightened on the edge of tears. Remember when I said that and someone got offended? Like this isn't the greatest playing field on earth? Jesus Christ. Ready? 30 seconds out. Copy trader. Engaged. All right. Come on, bulls. Give us a nice, clean close. All right. I am ready. Let's get it done. Give me a fill. Place my stop. Accept the outcome. Move on with our day. Not too bad. Little wiki, but I'll take that. I'm going to give that about 25, if not the full 30. There we go. I like where that sits. Let's see if the bulls can pop us up and give us a fill. If they can't, I do not want to participate. Because that shows a lot of insecurity out of them bulls on the rollover. So come on, 32. You got 10 seconds to pop us up through and give us a fill. No fill, no trade. Gotta pull it. Gotta pull it. Weak bulls there on the rollover of 31 into 32. All right, let's watch 32. See what it gives us. See what it gives us. I haven't been following the Tradeify Cup. I don't know what's going on, but I'm sure. I mean, listen, you don't even need real world proof. This is literally just a math equation. It boggles my fucking mind that people who think they're going to be traders do not understand the concept of there are infinite ways to get to statistical edge, which is what keeps you fucking paid. Having positive expected value. You can get there having the worst win rate ever as long as your reward to risk is high enough. You can get there by having a super high win rate and a really, really bad reward to risk as long as when you throw it together, it equals positive expected value at a big sample size, the law of large numbers. If you are watching this and you do not understand what I'm saying, you need to either climb aboard or fucking don't trade. That is the business. Would you ever open a casino? Would you ever open a casino? Picture this. You're a 1980s mob boss, mafia boss in New York City. You're exploring the possibility of a gambling business. Underground, you've got a nice spot. There's not even that many cockroaches. And you're like, this is nice. This is nice. I think we got a whole lot of scumbags we can invite in here. Would you open it without knowing the statistics of the games you're offering? The fuck no, that's your whole business, big dog. What's wrong with you? A lot of you guys are doing that. Come on, dude. The business here is positive expected value. If you don't understand the math of having a win rate and an average reward to risk, which is going to look different depending on the setup, that when you throw it together, it equals profit, you're fucking up. You're the fuck up. You got problems. If you're not even thinking about probability, you are, I really don't like this word because people toss it out too much, but you are gambling. You're gambling with negative expected value. So you are the fool. You are the player. It's not that big of a deal to just walk over the line to the house. But your ego's too big to not understand the math for 10 minutes until it clicks and you're like, oh, I understand the math now. You won't even take that jump because you're like, I don't need to. I'm just the best trader. Okay, stay poor. I'll talk to you in 20 years when everyone who took 10 minutes to understand the math and set their ego aside is fucking wealthy and you are broke with crushed dreams and you gave up 19 years ago. Sorry, big dog. Tough love. That's what you need to hear. And I'll talk to you in 20 years when you're rich. Actually, maybe I'll talk to you in 6 months when you're making more money than you ever have. All right, 32. That right there is why I use a stop limit buy on the close of 31, because I don't want to get a fill unless we get quick resolution break of the wick high within the first, 15 to 30 seconds, depending on setup quality and grade. Because that is a lot of bull insecurity, closing up there on 32. All right, 33, what you bringing us? $345 out here from the close of 33. The Bears can take this thing off a cliff. Close it beneath the wick low of 31. That would likely put us back into at least that wedge, and we could look to maybe, how long has it been? Yeah, we could look to maybe take out some early stops on a 25-minute to half-hour old level, the wick low of 27. It's not going to have a ridiculous amount of stops, but there are some down there at this point, beneath the wick low of 27. Because everyone looking at the wick low of 29, 28, 30 is just going to default to 27. Not everybody, but most people. They're like, yeah, it's not that much more risk for a pretty good bump in probability, so they'll place their stop beneath the wick low of 27. So, in 2 minutes, 53 seconds out, bar 33 will close up, and I would love to see it close up clean, as a nice clean bear body beneath the wick low. Not far beneath, but just beneath the wick low of 31. Let's see, Bears, you got it in ya? By the way, if you guys haven't, man, hit like on the stream. It helps out a whole bunch. And I really appreciate you doing it. All right. 90 seconds. Come on, bar 33. Appreciate you, brother. All right, what do we got? Come on, Bears. Let's give us a nice close beneath 25.511, 25.510. A lot of work to do out of the Bears for me to get short. We got to close up 20 points lower, a little more. But I better get ready just in case. All right, we are 40 seconds out. Copy trader engaged, just in case. I need to see bar 33. Take a lot of movement to the downside. Good. See 31 failed. Big wick rejection. Small bear body into a growing bear body. And if we can close beneath the wick low of 31, then I would like to put out a stop limit sell. And I need that to close just beneath the wick 31. Not going to do it. All right, let's watch 34. Can't do it. Insecure bears. Come on now. All right, 34 might have it for us, though. Come on, 34, man. We've been getting teased. We've been getting teased. That's all right. It's been a very good... I mean, it's been a pretty good, I guess. Couple of weeks. These last 3 trading days have just been teasing us. I think 34's got it in him. Come on, 34! Halfway through bar 34. Trying to take it back in, swallow up bar 33 and make this a trading range. Come on, you bears. You know, if they can turn the whole day basically into a big giant trading range, that's totally fine. If the bulls want to take it higher, that's fine. I can have a good probability of making money if they can do that. I would just need two to three consecutive bull bodies, growing clean closes. Even if the second is a somewhat small bull body with a doji, it's still a setup within RAM. I don't really care which direction they take it as long as they do something reasonable. $31 had potential, but $32 was insecure. No fill. All right, 35. Come on now. 340 out. I mean, again, kind of a lot of lessons here today, actually, as far as RAM is concerned. Now, I don't want to be the Monday morning quarterback, but as far as probability, it just so happens that we have some good lessons here. So, you see the close of 31. A lot of people who are newer to trading RAM, they'll try to cut the corner. And instead of, waiting for the stop limit buy to fill, they'll just punch it with a limit, which, I mean, listen, if you can buy the market if the bull body is closing with 0 wick. You can just punch a market buy because there's no wick, right? There's nothing to clear. It closed literally at the high. So you can hit a market buy if the bull bar does that. When there's any wick at all, and really in most cases, I prefer to just use a stop limit buy, which needs to punch through to fill you long. It avoids this kind of thing, and this would have stopped you. Okay, it avoids getting filled when the bulls start showing insecurity. At least this way, the bulls start as still secure enough to justify the trade, at least for me. And then on 33, it didn't close beneath the wick low of 31. That's not necessarily a coincidence. I mean, it was 7 points away, 8 points away from being beneath it. That changes the probability. That shows a little bit of bear insecurity or a little bit of bull strength, maybe trying to make this a wide trading range. The little nuanced stuff, don't cut the corner, I'm telling you. The reason you're cutting the corner is because you're bored on slow days. You want to put a trade on. Well, I say to the tomb like damn near every fucking week at this point because it's so true. Do you want to be entertained or do you want to be rich? You have to pick one. Now, not to say that, you can't make money and then have fun. That's not what I'm saying. I'm saying that, like, at the charts, especially in the beginning, do you want to treat this like your entertainment or the thing that keeps you and your family paid? Kurt, this is a 5-minute chart. All right, minute 13 out. All right, back in 2. Don't go anywhere. We're going to get some action here. All right, welcome back. We've got, you didn't think I was going to miss bar 38, did you? We've got a nice setup potentially forming on here. Bar 38. Come on, 38. Give us a nice move higher. Close this baby nice and clean. And let's see what we get. Of course, 37 closed outside the wick high of 36, but inside the wick high of 32. Nothing on 37. All right, 25 seconds out. Copy trader engaged. Got to see a nice, clean, not too much wick close here out of the bulls on bar 38. And if they can pull that off, I have got a present for them. Pop it, bulls! That's barely reasonable. I'm only going to give that 15 seconds. I'm going to give that 15 seconds. If we do not get quick resolution, I do not want to participate. But if the bulls can pop it and give us a fill in the next 5 seconds... No fill, no trade. Got to pull it. Insecure bulls, man. All right, let's watch bar 39. Now, why does that bar only get 15 seconds? Because 38 was a bit wicky. Just barely acceptable. So, let's watch 39 here, see if it gives us what we need. By the way, one of the best deals they've ever ran over at Apex, 70% off, $40 activation fees. Those are normally $140. And you can still pass in 1 day with code BIG, B-I-G. That ends tomorrow. Go hit that up. All right, 39, looking good. 3 minutes, 37 seconds out. Let's see what you got. Good work, bulls. Now we have had a big problem with insecurity today. Well, let's see if these bulls can close this up nice and clean. They gotta do it. Gotta do it. $220 out. All right. Let's pop on over to the execution screen. I'm all bulls. No insecurity. All confidence. Close this baby nice and clean. It's about time. Come on, bulls. Insecure ass bulls. Well, 23 seconds out. Gotta get the copy trader engaged. If these bulls can show some security with themselves. Goodness, it's try, wick back, and then hesitate to make the move. Bar after bar after bar. Gotta be ready. I don't want to miss anything. Absolutely not. Bulls, insecure, more insecure than ever there. All right, bar 40. What you got? All right, 40. Give us a nice clean close above the wick high of 39. Two minutes, 40 seconds out. All right, bar 40. Good work so far. We've seen this a handful of times. And then we get that last second insecurity. So come on, bulls. Close that guy up nice and clean. As little wick as possible. Above the wick high of 39. Come on, Bulls. 20 seconds out. Copy trader. Engaged. Gotta see the Bulls have a little more security than they've been having most of the day. I want to see them close that above the wick high of 39. They can't do it. All right, 41, what you got? All right, 41. Is it going to be our magic bar? Come on, 41. How many bull bars does it take to give the Bulls enough confidence to not retrace in the last 60 seconds of the bar? I don't bet on insecure bulls. I bet on cocky bulls when the context is correct. All right, Bulls, 2 minutes. They got the confidence. They're going to give it all back in the last 100 seconds or so of the bar. We do have stops up near the high of day, by the way. Right up here. Now, granted, I may end up breaking that into 2 trades, depending on the size of this bar at the close, if we get the entry to begin with. Minute 35 out. All right, let's hop over to the execution screen. 30 seconds until the close here. A big bar 41. Got to go ahead and get ready. Let's get the copy trader engaged. $15 seconds. Need to see a nice clean close out of the bulls. Obviously above the wick high of bar 40 with as little wick up top as possible. And then I've got a stop limit buy to place for the bulls to fill us to the long side if they can break the wick high of 41 on the open here of 42. We'll give that 30 seconds to give us a fill. ATR 29.5, by the way. 15 seconds to get a fill. Come on, bulls, take it through, baby. Oh, ho, ho, ho. Wow. I clicked cancel. And at that exact moment, it took it and filled us long. So great, we're sitting long. Very last second, by the way. Barely got the fill at the 30-second mark, so we are good to go. Can you believe it? Beautiful. ATR 30. That was kind of nuts. I clicked the cancel button while it was filling. The exact same time. That's crazy. That's about as last second as you can get. Good setup here. Now we just let it work, let it not. Accept the outcome, move on. Good probability here, though. Go ahead and place my take profit up there. On the break of high of day, if we can take out a couple of stops. And I'll actually give it a little extra. There we go. Alright, now we just manage bar by bar if needed. And we let it see if it's gonna work for us. See if the bulls can just take out the stops up top. I'm not looking for a big run on the break of the stops on the wick high of bar 12. That is the high of day. I want to take profit as soon as that high of day breaks. So stop losses get triggered. Then chances are the bears take it right back into the day's trading range. Well, ATR is all right, about 30, 31. And I am looking for better than 1 ATR, because that take profit right up there is right on the break, a couple of points past the high of day stop hunt. But volatility being what it is, and with the probability of the bears at least trying to take it back in the full day's trading range, I really only want to take a couple of points on the stop, on the break of stop, on the stop hunt, get out, and then reassess. So as far as management, there is not much for me to do here, except sit and see if it works. All right, bulls, not too bad. Let's keep that moving. Whole bunch of work you still got to do for us here. Let it do its thing. All right, not the greatest close on a 42 or 43. Those are also not decision bars, so any decision that I would make here would be purely emotional, which I'm not into. Which hopefully you know by now. So, 44, let's take that baby higher. Do it. All right, Bulls. Let's take us up through, pop us through those stops at the high of the day, which is the wick high of bar 12. That happens to be right about here. And hit our little limit take profit. Oh, you balls. You balls. Well, you see the bull insecurity, but the bears... There's nothing for me to do as far as decision bars. So we wait, and we let it work, and we see if the bulls can get the job done here. You know how it goes, they say. Oh man, be a day trader. Oh, it's exciting. What an exciting life. Oh, the adrenaline. The risk. This is what we do. So you want to be a day trader, huh? Get ready for a whole lot of sitting, waiting. Oh, man. Well, ATR is down to 24, which is still manageable. It's not ridiculous. Well, there's the open of bar 48. No decision to be made on 47. So we wait. Come on, Bears, do it to us. Somebody get some security here. I want to go to lunch. It's crazy. Those Bulls, man. Grind, grind, grind. All right, Bulls. Let's get a whole bunch of confidence out of nowhere and take this baby 800 points. 800 points! Give me 300 points of slippage in my favor. Oh, you Bulls, Bulls, Bulls. See, Bulls, this right here is why, given the option, if you said, Nico, you can only trade to the long side or to the short side intraday for the rest of time. Although there is, of course, positive drift in the market tends to go up over time. So statistically speaking, there's a slight favor or I guess there's a slight lean in favor of the Bulls, even intraday if you look at the big picture. But this Bulls, I know I'm on your side right now, is why I would have to pick the Bears. Because the Bulls are sometimes so soft. And those Bears like to get nice and cocky. They are that dude a little more often than you, Bulls. What's the insecurity? What's the holdup? Let's punch through those stops and make those typically real cocky Bears fucking cry. Take this baby through the high. Take profit is right through that stop hunt. Sometimes you just gotta start talking some shit and the Bulls start listening. Sometimes the Bulls just need a little push. The Bears usually take care of it. They're like, no, we got it, big dog. And they take it down through nice and quick while everybody runs and screams in fear because the market is crashing. The Bulls, sometimes you just gotta poke them a little bit. It ain't over till it's over. We got to take out that high. Got to take out that high. Do it to them, bulls. Take it through. Take it through that wick high at bar 12. Take out those stops. Weak. All right, big bar 50. You're the one, 5-0. Do it. This is the bar, baby. This is the one. All right, bulls. Pop it through. Pop it through. Or are we too insecure to take out the stops at high of day? I don't think so. You got it, bulls. You can get it done. Muster up some confidence. There we go. Well, it's about time. 5,300 bucks. Bulls got that confidence. See, with the Bulls, sometimes you just gotta nudge them a little bit. It's all love. We love the Bulls. The Bulls also keep us paid, but the Bulls are like the little brother. Sometimes you just gotta push them a little. They like to grind. All right, moving on. Moving on. Yeah, the trade took about, what, 40 minutes? About 40 minutes. Well, mid 5,300. So if we conveniently forget the time that we spent waiting, which, you know we gotta do. That's 7,000 bucks an hour. I'll take it. Just take more trades. It gets easy. Eventually, you are so secure in your statistical edge that you no longer really care about the out. Listen, I want to win. I want to win the trade. But whether I win or lose that trade, it makes no meaningful impact on my mid to long-term outcome, which is profit, because I have a positive expected value. And when you have that, and I don't say that to be like, wow, he's such a dick. No, I say that because I'm saying that's how you get to the point where the psychology is fixed. You just have such a track record that when you look back on it, even when you have doubt creeping into your head, you're like, I can't even really be upset because I look back on this and I make money when I do the right thing. And when you have that track record, you stop caring. You really don't give a fuck about the outcome of any one trade. Again, I want to win each trade. I like winning each trade, but I know it's not the reality. You're good at losing is part of winning in the game of trading. The same way that the casino, every time they deal you blackjack, they know there's a 48% chance that they're going to lose. But they keep dealing you blackjack. Does the casino owner come over with tears in his fucking eyes when your grandparents from Omaha win 2 in a row at blackjack? Nope, he doesn't. But some of you guys run your trading business like that. How stupid does that sound when I say it out loud? Sounds really dumb, right? Stop doing that. How do you get that track record if you don't have it? Well, that's the part that's backwards about trading. That's the hard part. You don't have it yet in the beginning when you need it the most to maintain composure. Well, you size down, you trade some kind of logical methodology like RAM, and you take your time. In 3 weeks, you'll look back and say, damn, I wish I did this 3 years ago. All right. Yeah, Leo, it doesn't matter. You guys have seen me take trades where I was in the red for an hour. All right, $5,300. I'm off to lunch. We'll see what the afternoon brings. Hey, subscribe to the channel if you're not. I will see you guys tomorrow morning. Hey, by the way, you want to learn how to do RAM, how to trade RAM? Fastest, best way to do so is to join the tomb. I will see you inside. Bet on you. You want to expedite this process? I'll see you inside. Otherwise, the stream is free and always will be. All right, guys, see you in the morning. Have a good afternoon.